Business Now on the programme. Fernand is with us. Travellers flying Lufthansa should brace themselves today. We've got another day of mayhem. It just goes on and on, this, doesn't it?
It really does. I mean, Lufthansa did try to stop this from happening, but a Munich court yesterday overturned that. And that means thousands of passengers could be left stranded again today. Around 1,700 flights will be cancelled this Tuesday and Wednesday as German pilots continue to demand more pay. Julia Kim has the details.
The 15th strike since April 2014. From this Tuesday, 1,700 short-haul and long-haul Lufthansa flights will be grounded for 2 days. Nearly 200,000 people will be affected as pilots and airline bosses fail to settle their long-running pay dispute.
We are always ready for dialogue, and if Lufthansa approaches us with a reasonable offer, we would be ready to negotiate at a very short notice. And of course, if an acceptable agreement were to follow, it would be possible to call off the strike measures ahead of time. But first they have to come to us with a substantial offer.
The union went ahead with the walkout after they judged Lufthansa's offer to increase the pilots' pay by 4.4% in 2 years as not substantial enough. Vereinigung Cockpit is demanding an average annual pay rise of 3.7%, backdated 5 years, and a one-off lump sum payment. Lufthansa says this would make the company unprofitable.
Vereinigung Cockpit insists on a wage increase of almost 20%, even though with their average annual increase of 3%, they're already amongst the better paid pilots.
A 4-day walkout last Wednesday by Lufthansa pilots forced almost 2,800 flights to be cancelled and affected more than 350,000 passengers. Lufthansa pilots are averaging about one strike every 2 months. The airline has estimated it's losing 10 million euros a day because of the industrial action.
Julia Kim there. Now, big day today for Samsung. The company has announced that it might split up.
Indeed, big day for South Korea, it seems. This, of course, a company that is known for its culture of secrecy. And now the South Korean tech giant has said that it might shake up its corporate structure and bring in a director from outside of the country. Now, this follows a letter from US investment fund Elliott Management. They pushed for Samsung to create a holding company that serves as an ownership vehicle for the Lee family that founded the company, and also a separate internationally listed company for the electronics business. Now, first up is a 6-month extensive review, and the move comes after the Galaxy Note 7 fiasco. That was when a flagship model mobile phone was recalled earlier this year after its battery continued to explode. Now, Samsung also said it would pay out 50% of its free cash flow to shareholders both this year and next year.
This next one's going to be a big story of the next couple of days. OPEC countries set to meet tomorrow, in fact, to decide whether to cut oil output. What's the latest on this one?
You can't have an OPEC meeting without a bit of drama. That's happening now as well. Yesterday saw a marathon meeting as Iran and Iraq continue to express objections about decreasing their production. Now, OPEC countries agreed in Algiers to cut 1.2 million barrels a day from October levels. But now Saudi Arabia is trying to pressure the two countries to reduce their output after it said that it would also slash its output by 4.5%. Non-OPEC member Russia, meanwhile, has said it will freeze but not cut production. We'll know by tomorrow, when OPEC countries formally meet in Vienna, what they decide.
It's like an oily soap opera, isn't it? Is it affecting prices then?
Yes, of course it is. We were seeing a bump initially of hopes of that deal being reached. Now, oil giving up gains this morning following that 10-hour meeting yesterday. Yet markets just unsure whether they'll really be able to deliver. Now, you can see both WTI crude and Brent crude trading down almost 1% there. Now, the point, of course, of this meeting is to decrease output and push up oil prices. So you can see that not working out so far. In Asia, shares are mixed this morning. Markets, of course, focusing on the news from South Korea that the president there will hand over power to parliament. We can see mixed bag. Kospi actually not down following that news yet.
And finally, the president of the European Central Bank has said some warning words about Brexit.
Yes, who doesn't, especially from the European front. But Mario Draghi has warned that Britain, rather than the Eurozone, will, quote, first and foremost feel the pain of Brexit. When he spoke at the European Parliament in Brussels yesterday, he also called for clarity on the UK's plans for the Brexit process. And he said that it was impossible to estimate the full economic impact of Brexit at this stage, but noted that the single market had been, quote, a fundamental asset for the UK, especially for its banks. Let's take a listen.
if, in the long run, the risk of a less open UK economy in terms of trade, migration, and foreign direct investment were to materialize, there would be a negative impact on innovation and competition, and thus productivity and potential output.
Mario Draghi there. Fernand, thank you very much. Fernand with the Business of France 24. Next half hour for you, we're going to take you to Germany, in fact, struggling with the oldest population in Europe. It's been doing all it can to boost its low birth rate. 156 measures costing some 55 billion euros, now credited with working. But is that change really because of government efforts? We're going to investigate for you in Focus in the next half an hour.